So let's move on with the next panel, which is being hosted by me. All about operational resilience, not Dora the Explorer, as somebody tried to persuade me it was going to be about last night. Well, as I was saying, not Dora the Explorer, but digital operational resilience, the importance thereof. And I'm going to invite to join me on stage a panel consisting of Anthony Bream, UK and Europe Business Strategy Advisor at Geome. So if you would like to get up there and make yourself comfortable, Anthony. Next, we have Karen Mei Ching, Global Financial Services ISV Sales Lead at Amazon Web Services. Sahil Thapa, who is the Chief Technology Officer of Recognize Bank. And finally, Susanna Froment, Global Head of Financial and Credit Risk at Tide. Nobody wakes up in the morning and thinks, I'm going to do some digital banking. Nobody wakes up in the morning and thinks, I'm going to do some open banking. Most people outside of rooms like this don't know what open banking is. And there's no reason why they should. It's an industry term. What they do understand is the services that it can confer. And that's partly, although I was throwing hand grenades and rocks at the previous panel at the end of their session, that's partly what differentiates a digital bank or digital banking services from traditional banking services. Sahil, as one of the bankers on the panel, we have two bankers and two technologists, which is actually quite handy. As one of the bankers on the panel, let me start this with you. What is the unique value proposition of a digital bank? Why would I go to a digital bank? Why would I go to Recognize Bank? Sell it to me.
Great. Can you hear me all? Yeah. Okay. So I represent Recognize Bank, just to kind of give a flavor of who we are and why do we exist. We are a 2.5 years old UK-based digital bank with a very targeted customer base that's focusing on SMEs. We primarily have expertise in offering financing solutions and take pride in having a technology stack that's powered by leading fintech providers, right? So from a bottom-up perspective, we have the benefit of building a bank that's taking best-in-class technology solutions and then applying a customer-centric and product-centric application layer on top, which we are able to extend to the end customer. That's just kind of a little bit of a brief about Recognize Bank. Just to kind of carve out certain bits around digital banks, the typical digital banks in the UK, you can classify them into 4 different types, right? There are these mobile app first banks, which are offering, accounts and connected services. There are specialist lenders and challenger banks like ourselves who are, enabled digitally through, modern tech stacks. Then there are hybrids. You can almost kind of categorize old challengers into that space. These hybrids would typically have, brick and mortar branches, but also have some elements of modern technology that support their operations. And then there are these banks like Clearbank, Griffins, who are providing, basically extending their banking license to other sort of players in the ecosystem, right? And if you have to kind of create a common sort of layer across them, they've been able to create a customer strategy where they've segmented this customer space into niches, right? What they've understood is that the traditional banks have kind of taken like a one-size-fits-it-all approach historically, right? There is sort of a need to break that up. And so they've cookie-cut the whole problem space, identified customer segments, understood their pain points, and created very bespoke customer experiences that can kind of solve for those pain points. And I think we would all agree that technology, specifically the advancements that have been done in last let's say 2 decades, has had a big part to play into them being able to offer those kind of products and services to the end customer. So I think that differentiation has been more on the application layer, where almost the cost of building the infrastructure and the technology stack has come down. So new digital banks have been able to cater more or focus more on customer needs and the products and services they could value out of it. I think that's something that's not seen before. And just to kind of wrap it up with a little bit of a stat, specifically in the segment that we operate, which is like financing solution for SMEs, there's been an increased trend of customer adoption. If you look at all financing that happened in the SME space in last 2 years, almost 60% of it was done by challengers and specialist lenders, right? So they are acquiring that space, at least in the segment that we operate. And that's going to be like a continued trend because they are sort of operating with nimble operations and a technology stack that's much more modern and doesn't have the baggage of legacy.
Is it a benefit that the barrier to entry has been reduced? It is much cheaper. If I wake up tomorrow morning and think I am going to set up a financial institution, a banking institution, it's actually a lot easier and quicker to do so than it used to be.
Most definitely. I personally have banking experience at large banks, spent awfully long time at Deutsche Bank prior to this gig. I can give you some personal statistics. For us to launch a variant of an existing lending product at Deutsche Bank would be a journey of several months before we could take it to market. Versus right now, what we are enabled through our technology stack, which is, like I said, powered by modern players, it's a matter of days and weeks. Right? That speed to market and the velocity of change that we can support on that tech stack is a differentiation that almost that's kind of accessible to all sort of digital players these days, especially the ones that have spent that time of building a stack that's agile, modular, and allows for that velocity of change.
And where you build it, yes, please.
Can I contribute just a little bit? Hi, my name is Susana Pons-Fomon. I am the head of Credit and Financial Business Tide. And this is Tide is a financial platform which provides financial services and digital financial products to small businesses as well. And I think it's super relevant to address your question about how the barriers of entry have decreased through technology. Because, for example, in our case, we're not a digital bank. We are a financial platform which aggregate partners with, for example, digital banks, to provide financial services. So that makes a huge difference because there's the barrier of entry before to create new banks was very high because you had to get a banking license. And the process to get a banking license takes, a year and a half, 2 years sometimes. So
sometimes longer, ask Resolute.
Yeah, it's a very, very time-intensive and very, very difficult process. The standards are very high, and so now companies like ours, we don't need a banking license. We have an e-money license, but we don't need the banking license, which allow us to enter the market quicker. So I will say the barriers of entry, if you play with the technology and you build platforms and partner with other financial institutions to offer products, that is allowing the different companies to launch operation faster.
Okay, let's look at another useful bit of technology that allows you to manage your operations more quickly. Karen, cloud as an enabler of digital banks. Discuss.
Okay, where do you want me to start? So I've been asking my colleagues about this because I came from the banking industry 20 plus years. Don't be fooled by this thing. So 20 plus years, and I've started my career in AWS when I started dipping in technology when I was in UBS and JP Morgan. So, you know, the tech, that when you talk to the technology guys, there's very siloed team that doesn't tell you what's even happening to, to all the transformations that's happening there. That piqued my interest to join AWS as a specialist. Why I'm saying this is I've been preaching core modernization and mainframe modernization when I first joined AWS, and I'm not even a technologist. Why I agreed to that is I've seen the opportunity on how you can digitalize things and how can technology solve our problems. You know, words came out from our colleagues here, from Sahil, like velocity, like speed. So I think digital banks can exist in the cloud. You need to understand considerations. I will not preach here, but need to understand consideration. One is the speed to market. How quicker can you enter right now? Because the dynamics of our customers are really changing. Our segments are really changing. Because when I started as a relationship banker, we have the low, mid, and high net worth. Now within these segments, you have different kinds of personalization. Like every person in this room have different needs. And these banks are answering those needs in milliseconds. The moment you press the button that you said, I have a fraudulent transaction, you lift the phone or through your mobile phone and they would say, we canceled your card, you have a new card, put it in your Apple Pay, no need to change, you're done. And automatically that merchant is blocked on your card. And you would see all these transactions in real time. Before you don't do that. I'm from Southeast Asia, you have to lift the phone or you have to go to the branch, get an authorization to even print a statement. You don't need that now. So that's quite important, the speed. The second thing that we're looking at here for digital banks is, because we're talking to a lot of them, obviously, in AWS, and even those big banks like JP Morgan have built Chase UK, right? So when they built Chase UK, they were thinking, we want to, because Chase is the retail bank of JP Morgan, and it's just existing in the US. Right. It came into the UK 2-3 years ago as a challenger bank, and now it was awarded by its customers over 1 million less than 3 years to be one of the best digital bank in the UK. And to think this is an American firm who's quite paranoid on all the fraudulent transactions that you can ever have and have gone digital. So what I did was, how is this customer service that they're saying? So I've severed my relationship with Citibank for 30 years as a customer. And I said, I'll go digital. I've transferred, because in the UK you can switch, right? You can switch accounts. So I called my bank. I said, I'm going to switch accounts. And, you know, of course, the other bank is saying, why are you serving 30 years? I used to work for Citibank for 10 years. I said, well, I'm going to test this one. So I was able to onboard in 2 minutes. Sahil is smiling, but it's true. I did my verification, scanned my IDs through the use of AI. All in 3 minutes, done, verification, signature done. And then in 5 minutes, I have my Apple Pay working. And I can do my transactions. And I said, so where's my physical card? It's an option, but being a banker, I want that physical card for a sense of security. Of course, now, they don't, it's all plain, right? So the likes of Monzo, Revolt, they don't print your names and your card numbers, right? It's all in the mobile now. So that card came to me in a matter of like 2 days. And every time I find a fraudulent transaction or I question my transaction, I don't need to cut that card. That card remains the same. The information is changed and it's in my Apple card, right? In my Apple Pay or Apple Wallet, whatever you call it. So at the end of the day, working also on your know your customer is quite important, right? The KYC process and how you're digitalizing that now. And here is more on the customer service and ease of use. Do I talk to AI when I call them? No. I can talk to a real person, right? And mind you, that contact center, they might have built it in just 3 days, because that's less than 1,000 seats when they started. Because in AWS, there's a bit of a plug. If you're trying to modernize your customer service or contact center, we can build 20K seats in a matter of weeks, right? Another consideration, so you have the speed, you have that customer service. I'm gonna throw something out there in the back office. Because you are so fast now, so your transactions are 10 times higher. How is that back office doing? That's my first question to our customers, because that's when all the automation is happening in the front and the middle office. The back office still have manual processes to take on all these things. That's when, transaction monitoring erupts. That's when your false positives does not go down because they cannot keep up. So this is where companies like ourselves do a lot of enabling and we become transformative. So I used to do a lot of change management, and my favorite is really operations. Because just talking to one person, you can identify 100 forms of waste, right? So take a look at cloud, not just a technology enabler, but take a look at it as one, eliminate waste. Second, not just automation, but put in new ways of working. Because we were talking to one of the, probably they bought one of the banks you've mentioned earlier, and what's happening in the UK market now. So the CEO came to us and said, Karen, what are the risks? I said, how do you want to change your new ways of working? Because we often say, okay, we're customer obsessed. We put customer at the center, but often we forget the user experience. So that's when it starts. That's when it starts, like, how can we improve that to support whatever transformation you want to do in the front? So that's one. Last but not the least is, I think we're gonna talk about this later, but I'm gonna put it out there, is resiliency, and how do you manage that now? Because cyber attacks, I don't know if you've read this, like the one happened in Santander recently, right? Millions of customers in the UK, and also, employees. And in the dark web, they just publish it. Not that I'm accessing the dark web, that's not allowed, but we know that they exist. And the young millennials in tech often play there a lot, right? And that's where you get smart on hacking. And the way we approach resilience at this point is still proactive. It's reactive and not proactive. And now we're in the state right now where our customers are asking us, well, you ask us to build the core banking in the cloud. We're a digital bank, we build it in months. How sure are you that this regional and availability zones has that redundancy and resilience? Because before, you need to have a mirror site, right? So for example, I used to run operations for security services for JP Morgan in the Philippines. Of course, my other site would be either Bangalore or Bombay. So my team of 100 is similar to the team of 100 in Bombay. So when Bombay goes down, we pick it up, right? But the name of the game right now is not like that, right? Because when you build digital banks, what would the CTO, the CIO, the CFO, and the CEO would ask you? What's in it for me? It's the bottom line, right? So you have to make sure that these are all considered because you're getting that return on investment. But key considerations on risk and understanding the security of your cloud provider is very, very important at this point. So I think, yes, they can exist. And I think my colleagues here from Tide and Recognize understand that as well. And I think once you have that velocity, the most important thing is innovation. Because what you're thinking right now, somebody's implementing it. So how are you using that data as well? So those are some key considerations that I'm trying to.
Thank you, Karen. Let me bring in Anthony on a final point on this particular round of questions. What we haven't talked about yet is the regulatory landscape and how that affects institutions, because the one thing we can say is that it's only going to get more complicated. There are going to be more, banking is already a highly regulated industry. Anybody in this room who doesn't know that is bonkers, but I'm sure you all do. It's a highly regulated industry. It is going to be even more highly regulated as the authorities try to react to new threats, new threat landscapes, new opportunities. What AI brings may be great, but it is also going to bring an avalanche of new regulations which have started to come as well. Yeah. So how can an institution prepare to manage that?
Yeah. So, Robin, you've taken the words out of my mouth. There's a tsunami of regulation, quite rightly so, coming. And I think the issue has been years of fantastic technology innovation, really impressive in terms of digital banking and SaaS and all the things that we have talked about. But unfortunately, the tail's been wagging the dog on this one for too long. The regulators have fallen behind massively. And we've talked a lot about the benefits of core banking, modularity, cloud, etc. But let's just have a bit of a reality check of the bad bits of what's been going on out there. So look at Wirecard, right? Wirecard, under the German regulator, was run by a fraudulent CEO who's now sitting in Russia. And guess where most of that money went from the Wirecard fraud scandal? And it's now funding a war. Let's look at Synapse, who went bankrupt, a BaaS provider. That's impacted 100 fintech firms and 10 million customers, right? Let's look at Doc Financial in Germany. Let's look at multiple examples where it's gone wrong. And the reason it's gone wrong is because financial services is now a three-legged stool. And the three legs of that stool are the supply chain, which everyone is now reliant upon, whether it's AWS, a custodian bank, an agency bank, an IFA network, a cloud service provider, an outsourcer. It's also relying on technology, whether it's legacy or innovation. But the third leg of the stool are the bad guys trying to kill you, the fraudsters, the cyber attackers. The examples I've just given are relevant examples of fraud, relevant examples of cyber, but also relevant examples of firms running out of money. So Synapse had 100 fintechs that have now probably got severe financial issues, bad reputational damage issues, because they were part of that scheme. And how many suppliers do you have in your network if you're a bank that you're reliant upon? So if we look at the definition of resilience, it's how do you withstand or recover quickly from something going wrong? And DORA, as a regulation coming into effect next year from the European Union, is a start in the right direction to help build that resilience into the European Union. And the UK is following behind, India is following behind, and everybody else will have to. Because the implications of it going wrong, as I've outlined, are significant. They affect countries, they affect people, they affect businesses. And if you look at DORA, DORA's covering 22,000 financial institutions, but it's also covering 20,000 suppliers to those financial institutions. So 42,000 firms are going to have to be regulated, quite rightly so, to be more operationally resilient. That means that they can recover quickly or withstand a cyber attack, fraud, a legacy platform failing, a fintech running out of money, an IFA network being acquired, and suddenly they're your competitors, not your suppliers. And ESMA estimates that AWS, is one example, because they're sat next to me, run about a third, maybe even up to a half, of the financial institutions across Europe. So that's one service provider of cloud services. If AWS is hacked, is not available, suddenly has a problem, that can affect up to a third to a half of the European Union financial institutions that we're relying upon to pay our salaries, to look after our pensions, our investments, withdraw cash, and all the things that we take for granted every single day. So add into the pot Oracle, Azure, and the other US and non-US suppliers of cloud, suddenly the European Union and other global regions have major issues of resiliency based on people that they don't even know who they are. They're reliant on these services, which they take for granted, which one day may not be there. During COVID, Azure had to restrict capacity to its customers because it was diverting that capacity to healthcare, people developing vaccines, to other organizations. And none of these cloud service providers have actually been built specifically for financial services. So they're running healthcare companies, they're running manufacturing, telco, you name it. So the issue now is that three-legged stool is very wobbly because the cyber attackers are using AI, the fraudsters are getting more sophisticated, the technology innovators which are bringing the technology innovation in and the legacy providers are also causing risk into that ecosystem, and the supply chain that you're reliant upon, how much control do you have on that supply chain? So DORA is a welcome and a very much needed and a very important regulation covering 5 key pillars, looking at how you manage your ICT, how do you manage an incident when it happens, how do you manage your supply chain, how do you report to the regulator so they have visibility of where those attacks and impacts are coming in, so they can look at it systemically across the region or locally in a country or down to the bank level. And the 5th part of DORA is looking at the ability for you to build resilience into your operation. And resilience means that you get better every year at being more resilient. So like we developed a vaccine for COVID to be resilient against that disease, we have to keep on developing vaccines to keep ourselves healthy from other diseases. Banking is no different. Financial services has to remain resilient. So the regulators expect to see you improving your resilience every single year. Because you can't just say, we've done it, we're compliant, we can sit still. That's not resilience. Resilience is improving, growing, building, because the people trying to kill you are getting better at trying to kill you every single day. And we all know that. We've mentioned Santander, ABN AMRO have had a similar issue, and many, many more banks will as well. And my concern about open banking and open finance, and I love it and I think it's great, my concern is that's bringing more and more risk into the system because you're reliant upon more and more companies and technology and innovation that's out of your control.
Your
So,
third parties and their third parties.
100%. I mean, how many suppliers are impacted or are you reliant upon if they're cyber hacked? In the London hospitals recently, cyber hacked by the Russians, right? They've now publicly put on the website the results of blood tests from those people's records, and they are now ransomwaring those organizations to say, unless you pay us some money, there'll be more people getting their records made available on the internet. So just take a second to think about the impact of that, not just for those patients, but for your clients as a financial service provider, if their details are put on the web for sale. Bank balance, investments, lending, debt. You know, that's the impact if it goes wrong. And we've seen many examples of it going wrong. But with DORA and with everybody else's regulations coming along, it's going to start building in levels of protection, which is necessary and needed. And my biggest concern with open banking, open finance, just to finish, is I hear firms every single day saying to me, we've got DORA covered because we're ISO compliant. We've got DORA covered, but we want to be middle of the table. We want to do the minimum that we need to get compliance. That's irresponsible to take that attitude because you are managing people's money. You are exposed to all of the things that can go wrong in your business. Whether you have one supplier or 100 suppliers, you are exposed. So take DORA seriously, take UK operational resilience seriously, because ultimately, if you don't, you could be that firm that has your customer records one tap away from being made available on the internet because someone's ransomware attacking you.
I can put this in one sentence. Operational resilience is, if you get it wrong, an existential threat to the institution.
Definitely. No, and I would like to add, thank you. I would like to add that, you know, in addition to operational resilience, it's also very, very important to have financial resilience, meaning having a really, really good understanding of the liquidity position of your company and exactly what, in your solvability position, exactly what drivers will push your company into financial difficulties. Because, you know, like, of course, if you don't have liquidity in your company, you might not be able to comply with your minimum capital requirements. You might not be able to continue operations, servicing your clients, paying your employees, et cetera, et cetera. So for us, and from a risk management perspective, it's really, really important to understand, first, to set a culture, a risk culture across the company, to manage, to identify the different drivers that could be linked to operational risk to fin crime risk to also credit risk, compliance risk, all like these sub-risk classes, and build a very, very sound risk management framework, which will include risk appetite, how far you can go, for example, in taking, for example, financial losses due to a cyber attack, how that will affect your liquidity, how are you going to, recover from that, where are you going to get your money from, et cetera, and have, that risk appetite with very, very specific key risk indicators to create guardrails for your teams, your product teams, to build new products, to sell, to increase their revenue, and to be profitable as well. And all this has to be, it will come to life when you have a very, very well designed products, financial products, let's say like a mortgage product or a credit line or a payments product that is focused on managing the risk and in servicing the customer, but also making it profitable, and also having the support of policies, procedures, processes that are resilient. So are crystal clear and have a ratio, very, very well defined ratio, who is responsible for example, monitoring the risk, who is accountable, like from the senior suite, and ultimately, who's going to execute the strategy for each product in terms of sales, risk management, and operational resilience.
Okay, let's stick with the bankers just for a moment. Sahil, to you, what role does the technology you employ play in supporting operational resilience?
Cool. Is it working? Yeah. So just to kind of contextualize, right, where are we and what's the regulatory focus been, and then we'll kind of carve out the technology angle to oppress. I think all of us here were around when the GFC happened and what was the regulatory focus post that. It was primarily around financial resilience, right? The PRA, the FCA, they were all sort of creating policy frameworks so that banks are much more secure and are able to sort of, well capitalized to manage those sort of risks arising again, right? So there's a non-repeat of that. Ever since then, like you can almost say the decade after GFC, the focus has been on financial resilience, making sure it's embedded within the banking sector, right? And let's say last 5 years with the proliferation and the advancements of technology, creating digital ecosystems, interconnected technology stacks, the risk around business operations has picked up. Some of the anecdotes that Anthony just shared are just a few examples, but a lot of them are happening every day in and day out, right? And that's where the recent focus on operational resilience from a regulatory perspective stems, right? And those of you who haven't, I would highly recommend reading through very prescriptive guidance from the PRA on operational resilience. There is a very tight deadline for banks in the UK to comply with those guidelines as of March 2025. And if you really kind of were to break it down in terms of what is the high-level expectations from banks on OPRES, it really just kind of boils down to 5 key pillars, right? Do banks understand what are the important business services they provide, right? And again, a very specific definition of what is important business service. It's not an internal function. It's typically a customer-facing function. Can I, as a bank, issue a deposit account? That's an important business service. So that's pillar 1. Identify those important business services. Second, being able to define what are your impact tolerances across those important business services. At what level, either through a volume-based analysis or through a time-based analysis, do you begin to cause an intolerable harm to the end customer or to your firm? A bank should be able to define those tolerances and should be able to define them in a much more data-driven, forward-looking way, right? There's very prescriptive details around how to calibrate these tolerances by the PRA. And the third, and this is where the technology angle comes in, Robin, is being able to map out what does it take for a bank to provide those important business services to the end customer. And this is where the PRA is very specific on you need to be able to, as a bank, call out what are your dependencies at a people level, processes level, third parties, technology and platforms, and importantly, information, right? And this is where your operational resilience starts to break down into, let's say, cyber resilience at an information level. It starts to break down into technology resilience at platforms and third-party level. And moving on from there, across this mapping, the expectation from the regulator is the banks should have done a vulnerability assessment across this entire map that's needed to deliver your end services, right? Vulnerability assessment should cover single point of failure analysis, and specifically from a technology angle, you need to be able to take that analysis down to the last degree, right? What is the vulnerabilities at an infrastructure level? What are the vulnerabilities at an application design level, right? Being able to understand them, and wherever you have vulnerabilities, identifying testing and scenario testing to be able to cover for them, and have recovery plans that can sort of, cover for it, should a disruption happen across those delivery vehicles. So OPRES is kind of translating, like I said, into this entire mapping, which then translates into how do you basically ensure that you have sufficient resilience in your technology stack, essentially to be established by doing very periodic testing exercises with your suppliers, very kind of robust testing strategy across the software that supports your IBSs. And, like I said, we are in that journey, hoping to be ready by March 25 to be compliant with OPRES.
Briefly, Karen, there are ways and ways of taking a cloud service. There's public, private, hybrid, multi-cloud. Which is the right one for a financial institution?
There's no right or wrong answers, right? So I don't want to be quoted which one is the best, because there's a lot of, first is you have to understand what are the guardrails, which Sahil have already identified. And we've mentioned about DORA, where AWS is part of that public policy meeting every month with the EU. It happens every quarter. We have a dialogue with the EU to understand that. Because part of it is, one, understanding also the maturity matrix of our customer. So what I'm talking about here is, when we talk to the CRO, we always ask, are you aware how this ecosystem function in your bank? Because if you talk about to financial institutions who've been here for like 200 years, right? They wouldn't give up those mainframes and data centers easily and put them in the cloud. They love them, right? That's their legacy. So at the end of the day, what they do is they put up a digital bank, a neobank, right? That's separate. So they have two-pronged strategy in terms of banking. So that's when the complication to the ecosystem becomes very, very complicated in terms of resilience. So I think understanding that ecosystem is one, and putting the guardrails. So my guardrails are the guardrails that we talk about on a technology perspective, is what we call, how do you do your well-architected review? Who is responsible for what? And for AWS, what is our shared responsibility to that? So for example, if you're a digital bank built on the cloud, we are responsible on how that operates in the cloud, right? And then on financial stability, customer service, that would be the responsibility of the bank. So we have that ironed out already. And what we're talking about with our customers right now, Anthony, is, I hope you'll be pleased about this, is we're already aligning with them on how those regions and how those availability zones will be impacted with DORA. Because the deadline is, I think, on the 17th of January 2025. It's not far. So the banks need to submit their plan on how they're going to implement this, plus all these guardrails that they have to submit. And now, we're now working together with the likes of Microsoft and Google to really understand this, because some of the big banks, we coexist, right? So the big banks right now, or the traditional banks, are looking at if, for example, there's an outage, which normally I cannot count in my fingers, but I don't want to put point fingers out there, right? But for AWS,
I'll do that. NatWest, TSB last month.
yes, yeah. So
Nobody from NatWest or TSB in the room, is there?
so those outages, you have to understand how quickly can you get up, right? And cloud plays an important role if that service is on the cloud. So you need to be in minutes, you have to bring up, because especially if you have digital banking, mobile banking, everybody panics if there's a blackout, right? And for us, it's quite important that our customers understand that landscape. The last thing I would also take in consideration is, we've talked about the financial stability, the critical workloads like trades, clearing, payments, settlements. It's quite important to understand how will that impact, because these are workloads that impact the bottom line, the end of the day. Plus, I would put out their collections because it's net credit loss. The second part is, take a look at customer service, because your customers, they tend to panic a lot, right?
I'm going to call a halt there. I'm conscious of the time.
Sure.
Anthony, I need you to do one thing for me. Can you be optimistic? Because I think we're having a fairly downbeat session here.
My glass is always half full, Robin. But no, it's a good question. The answer is yes, because my friends on the panel have all given away the answers to the issue of how do you become operational resilient. And what's really interesting about the panel and what's really interesting about DORA is, for the first time ever, we're all in this together, because DORA isn't just regulating the FSIs, it's regulating the critical business service providers. The estimate at the moment, out of those 20,000 suppliers across Europe, the estimate is about half of those will be deemed by ESMA in the next few days to be critical service providers. They will have to also be compliant to DORA. So for the first time ever, we've got a common issue, but we've got a common opportunity. Now, Guillaume, who I'm representing today and working closely with, we've learnt lots of lessons over the past 10 years working closely with banks on how you deploy operational resiliency. We started 10 years ago working with the banks on Sarbanes-Oxley. Who remembers Sarbanes-Oxley? FATCA, Dodd-Frank, Solvency II, PSD2, all of these things that everyone's working on has to worry about. And we did it from a very simple viewpoint, because what we understood the bank's problems were complexity. IT owned the business process. IT would show business a technical architecture diagram, a technical system flow, and the business would say, we don't know which way to look at this diagram, we don't understand it. So lesson number one, make your business process meaningful for everybody in the business and the regulator and your suppliers. Lesson number two, don't rely on spreadsheets, because they are not able to provide resilience in your business. Lesson number three, show the regulator that you are on the journey of compliance. You have oversight, you have real-time monitoring, and you're able to show in a single pane of glass the picture of your business in real time, to show where you're remediating your issues, to show where you're improving your resiliency, and to show where you're actually tackling the issues that you know are the risks to your business every single day. That information is available in your business now. Just make it meaningful, in context, and available to people in the way that they need to understand it and interpret it, so they can act upon it. Lesson number 4, get access to data so you can do scenario testing, you can do analysis, you can do reporting, so you can actually start to be one step ahead of the people trying to kill you. So scenario testing on data, the data has to be relevant and real to your organization. So find the data which is out there for your supply chain, find the data which is out there for your controls, get that together, get it into context, take the meanings from it. And DORA also requires you to educate, certify, and attest all of your employees are affected by every single change that's made to your business. Policy change, procedural change, control change, risk change, process change, supplier change, system change. So How are you making sure that your employees are up to speed and are able to certify they've understood the change in the context of their role? So it all sounds very frightening and complex and horrible, but actually it's not. It's really simple when you get down to the nitty-gritty. And I think, GM launched their DORA 360 platform. We can support UK up-res. India's announced their equivalent to DORA for next year. It looks even more stringent than DORA, which is good news because it has to be more stringent. It has to keep growing. It can't just sit still. So look at your processes, look at your people, look at your suppliers, look at the visibility of that onto a single dashboard. Keep it simple, but also make sure that when you're doing your scenario testing, you're doing it in a real-life environment as much as possible. Synthetic data is meaningful and helpful, but it's not really giving you the clues that you're looking for to show the hidden risks across your business. That data's out there, go find it.
Ladies and gentlemen, I'm going to call a halt there. If you have questions that you want to ask any member of the panel, chase them round. Would you show your appreciation in the normal fashion, please?